Good morning, everyone. Thanks for joining us for an important update on ARPA funding and compliance, specifically for Native American tribes. This webinar will be 90 minutes long, presented by three experts from our National Tribal Practice team, Wes Benally, Mike Dearlum, and Rochelle Alcon, with time reserved at the end for plenty of Q&A. Thanks to those of you who submitted questions in advance. Our speakers will be sure to address those and more at the end of the session. If you have additional questions along the way, just click on the Q&A icon at the bottom of your screen and type those in, and we'll tackle those as well at the end as time permits. This webinar is being recorded, and we'll share the recording and a copy of the slides with everyone who's registered by this time tomorrow. We're not offering CPE credit for this webinar, though there are some polling questions inserted throughout just to keep you awake and get you thinking. So there's lots to cover today, so I will let Wes Benally start us off. Go ahead, Wes.
Thank you, Carla. Good morning, everybody. Thank you for the opportunity to present this information to you. More importantly, we appreciate you coming on to get more information on this. Joining me today, my colleague Mike Dearlum, Senior Manager here in the Phoenix office, Rochelle Alcon, Principal of the Client Accounting and Assistance team there in Albuquerque. My name is Wes Benally. For those of you out there, Yate, I'm Dene from Northern Arizona and serve as a National Tribal Practice Leader for REDW. And I'm going to go ahead and turn it over to Mike so he can get started with this stuff. And once again, thank you.
Great, thanks, Wes. And our briefly, our agenda today is going through a background of COVID-19 relief. This will be a lot of information that I think many of us are already aware of, but we want to give a good background on the COVID-19 legislation, timeline, et cetera. And then moving forward into ARPA requirements, we'll go into detail around that, along with the recently released compliance supplement addendum, going over ARPA and its compliance requirements. We'll talk about CARES Act versus ARPA, along with revenue loss replacement. I know that's an area where a lot of questions reside. Finally, we'll have ARPA federal reporting and other accounting considerations, and the ARPA reporting guidance and Q&A. And as was mentioned, we have a number of pre-submitted questions, and maybe we'll have some more during the presentation, which will be great to address. All right, so a background on the COVID-19 relief. Again, my name is Mike Dearlum. I'm out of our Phoenix office. Great to be able to present this to you today. And we're gonna, briefly kind of go through the background and, what initiated a lot of this and the timeline, and then move on to more, more current questions and relevant topics, which is specifically ARPA and its related requirements. So background timeline, obviously our early cases in the United States of COVID-19 were in January of 2020. Kind of shows you how quickly when it really counts, our federal government and local governments can react, because shortly thereafter in early March, we immediately had action taken by the federal government. And then, key ones that we're talking about today, March 27th, the CARES Act was passed of 2020. That's the Coronavirus Aid, Relief, and Economic Security Act. And then more recently in March of 2021, the American Rescue Plan Act, or ARPA, was signed into law. For COVID-19 funding, the largest 5 new programs we have are real ones that will be at the forefront of our discussion today in green here. But we'll cover the blue ones quickly. The Paycheck Protection Program, which of course many tribal governments and other enterprises took advantage of. The Provider Relief Funds and Education Stabilization Funds were 3 large ones. The 2 again today that we're going to be focusing on are ARPA and CARES. ARPA specifically, $350 billion in awards. And you'll notice that this is subject to single audit, along with CARES down at the bottom left, which is $150 billion in awards. Each of these has an ALN number. And so the key thing there is this used to be called CFDA. If you haven't been made aware these are now ALN, assistance listing numbers, which is good to know. And so you'll be seeing all the updated, federal communications, your grant agreements, et cetera. Pretty soon here, I'll start referring to that as an ALN number as opposed to CFDA. The breakdown of the use of ARPA funds, so the funding amounts, you can see here, $350 billion in total aid for states, territorial, local, and tribal governments. The tribal allocation of that being $20 billion. So a lot of funds awarded. The breakdown of that and methodology you can kind of see here. Of the $20 billion, Treasury equally divided the first $1 billion among all eligible tribal governments. The remaining $19 billion were allocated based on enrollment and employment data. And these were awarded in 2 separate payments. And we're at the point where, my understanding is the vast majority of this has been awarded and starting to be being used. And so we want to make sure today's presentation primarily focuses on the eligible uses, and with audit season upcoming, especially for tribal governments that are a 9/30 year end, want to make sure we cover that and what the expectations should be as our audits approach. We're going to have a polling question here. So how much money was allocated to tribes in the American Rescue Plan Act? And I'm going to, looks like that was launched. So hopefully you can see the poll. Go ahead and put your answers in. And again, this is just for, discussion purposes, making sure that we're all on the same page. So how much money was allocated to tribal governments in the American Rescue Plan Act? Give it over about 10 more seconds here before we end the poll. And we should be able to see the results here, hopefully on your screen. And yeah, we have really great responses here. 84% got that correct. It's the correct answer is $20 billion. Great. Now we're all awake. All right. Next one, another polling question. Which term below replaced CFDA? A, assistance listing number, B, federal spending number, or C, universal grant identifier? All right, so that poll should be launched here. Go ahead and get your answers in. We just talked about it, so hopefully get a lot of correct answers. We'll give everyone about 10 more seconds here. And the poll and share the results. Hopefully you see that. Yeah, the correct answer is assistance listing number. Just be aware of that. Sometimes the documentations, grant agreements we get take a while to react to changes like this, but you should start seeing that more and more frequently, and the phasing out of the CFDA number, including on your audit and financial statement reports. All right, so we'll dedicate some time here to ARPA requirements. I think this is really where the meat of a lot of our discussion today is. First off, we'll talk about some of the objectives. It's always important to really have a strong basis in the objectives of the federal award. This really drives a lot of the independent decision making of what the best use of the funds are for your tribal government. So number one, support urgent COVID-19 response efforts to continue to decrease the spread of the virus and bring the pandemic under control. Fairly self-evident objective there for ARPA. Replace lost revenue for eligible state, local, territorial, and tribal governments to strengthen support for vital public services and help retain jobs. And you'll notice here, as this is described, it says to strengthen support for vital public services and help retain jobs. So, there is a lot of misunderstanding, I think, out there, specifically within tribal governments, of what the replacement of lost revenue means and how that's calculated, reported, and utilized. So we're going to cover that. That's not during my session, but Wes Benali will be covering that in more detail. support immediate economic stabilization for households and businesses, and finally address systemic public health and economic challenges that have contributed to the unequal impact of the pandemic on certain populations. We also recently, this is really kind of hot off the presses, but late last week, the Compliance Supplement Addendum, which contained some really critical information on ARPA and the related audit procedures that will be occurring around your annual single audits related to that program. I know for many of us, that's going to be a major single audit federal award program for your 2021 audits. The compliance supplement gives a lot of information on what the key compliance attributes are, what your auditors are going to be asking about. And it's also a good indicator of what the federal agency is really focused on, what their compliance focus is related to ARPA. So this was just released. So, that required me to update my slides over this weekend and try to add some of that information. So but I'm glad we have key and relevant timely data and information for everyone. But it's great to review and prepare for your audits by reading the compliance supplement, and we'll review some of the highlights in a few slides here. So the general interim final rule talked about the eligible uses of ARPA funds, and they provided 4 eligible use categories specific to this legislation and grant. So number 1, to respond to the public health emergency or its negative economic impacts. Such a broad phrase, and I think it's really designed and intended to be like that. And then it lists a few things specifically after that, including assistance to households, small businesses, nonprofits, or aid to impacted industries such as tourism, travel, and hospitality. Really a lot is in a short sentence there of eligible uses for ARPA funds. And again, I think it's intended to be like that. And really the decision-making is intended to be at the local level, at the tribal level, for what is the best way to respond to the public health emergency and its negative economic impacts. And we'll go into some more detail on some common examples that were in the FAQs or other guidance that's been provided for eligible uses for ARPA. Secondly, to respond to workers performing essential work during the COVID-19 public health emergency by providing premium pay to eligible workers. 3, for the provision of government services to the extent of the reduction of revenue due to the COVID-19 public health emergency relative to revenues collected in the most recent full fiscal year prior to the emergency. And then 4, to make necessary investments in water, sewer, or broadband infrastructure. All that coming from the interim final rule. So again, providing us a little more guidance and direction on what the intended use and eligible uses of the ARPA funds are. Always want to remind everyone, we get a lot of great guidance, a lot of great FAQs, reading through those. The general cost principles still apply. And one thing is we've focus our careers on serving tribal governments. We've noted that sometimes you have to kind of go back to the basics a little bit, and it's always critical to remember that those general uniform guidance cost principles still apply. Specifically to CFR 200, cost principles, factors affecting allowability. The cost must be necessary and reasonable for the performance of the federal award. So even if your expenditure seems to fit in those criteria, they still have to be necessary and reasonable as part of the use of these funds. Additionally, further defining reasonable costs in the uniform guidance would be incurred by a prudent person under the circumstances prevailing at the time. And finally, the last bullet point, we're still following the tribe's established practices and policies regarding the incurrence of the costs. All right, some eligible uses that have been defined, and this has been put together through FAQs and other guidance issued from the Treasury. But in the public health category, COVID-19 mitigation and containment, So COVID-19 services and programs that can include mitigation, containment, awareness, and outreach. For medical expenses, provide care and services for obviously COVID-19 public health needs, risks from new variants, which we're all hearing about in the news very frequently now, and long-term effects of the virus, which I think is something to keep in mind for the future. Behavioral health care as well is covered in here. Mental health, substance abuse, or other behavioral health needs. Payroll and covered benefits for a variety of governmental functions, including public health and safety. The services for those individuals must be devoted to COVID-19 and its fighting the negative impacts of that. Expenses to improve the design and execution of health and public health programs, planning and analysis. You'll see data analysis on there, improving data or technology infrastructure as well. Some additional ARPA eligible uses, more stemming from the negative economic impacts. So workers and families, assistance to unemployed workers and job training, food, housing, cash, and other assistance to households impacted by COVID-19, and survivor benefits for family members of COVID-19. Small businesses, loans and grants to mitigate financial hardship, loans, grants, and in-kind assistance to implement COVID-19 prevention or mitigation tactics, and also to provide technical assistance, all of that aimed at assisting small businesses. Finally, impacted industries, tourism, travel, hospitality, or other similarly affected sectors. Addressing disparities of public health outcomes. So we'll start at the left there, community health workers and public benefits navigators, remediation of lead paint and other lead hazards, community violence and intervention programs. On the next column there, investing in housing and neighborhoods, so services to support individuals experiencing homelessness, affordable housing, housing vouchers, etc. Addressing educational disparities, new or expanded early learning services, expanded resources for high poverty school districts, and additional educational services, tutoring, school programs, etc. Final column there, promoting healthy childhood environments, new or expanded health quality childcare, home visiting programs, and services for child welfare involve families and foster youth. All right, finally, we'll touch a little bit on the compliance supplement a little bit more. And just as a reminder, this is a great thing to review for, I would say, specifically your grants that have incurred significant expenditures in the current year. It's always great to look at the compliance supplement. You can really anticipate what your auditors are going to be asking for and kind of prepare beforehand for the information they're going to be asking for, the questions they're going to be asking, and really be prepared to pass your audit with flying colors. So auditors must audit recipients on award funds they expended for their fiscal year 2021 based on the requirements set forth in the Act and Treasury's interim final rule and frequently asked questions, including FAQs that were in effect at the time of those expenditures. So it is really key to document what FAQs were available to you and you were reading and interpreting at the time that the expenditures were incurred. And obviously, whenever there's legislation like this that is, awards passed out quickly, there's not an ideal amount of time to increase the awareness and have the guidance in a perfect condition prior to the awards being passed out. So make sure there's a good documentation regarding what FAQs you were reading through to make your determination for the allowability of an expense. The compliance supplement always provides a matrix of what compliance attributes are applicable for that specific grant and grant year. For ARPA for 2021, allowable activities and allowable costs, you'll see A and B there, are both applicable. very common. I don't know if I've seen a grant where that's not not applicable. So of course, the activities and how the funds were spent are going to be reviewed by auditors. Moving over to the right, we'll see period of performance in column H there, when the expenditures were incurred and meeting the period of performance criteria is applicable. Procurement, suspension, and debarment in column I is applicable. That's of course making sure that you are following your tribal government's procurement policies and procedures and ensuring that those policies and procedures related to procurement align with uniform guidance and federal requirements. In column L, reporting is applicable. So the ARPA reporting that's being completed is applicable. And then sub-recipient monitoring. And I'm glad the compliance supplement this year, and we'll talk about this, I think, on the next slide, helped to define sub-recipient monitoring and what a sub-recipient is a little bit more, and made sure they clarified maybe the difference between a sub-recipient and a beneficiary. And we'll talk about that here momentarily. Yeah, a few additional items in the compliance supplement. It does specify that funds cannot be used for deposits into a pension fund or rainy day financial reserves fund. Most of the guidance we get is what types of things can ARPA funds be spent on. The fact that Treasury went out of their way to define a few things that it cannot be used for is helpful, and these were mentioned in the guidance and in the compliance supplement. It also defines in the compliance supplement revenue loss in and of itself is not an eligible use. The result of revenue loss calculation should not be reported on the CFA. And again, there'll be a more detailed discussion on revenue loss coming up here soon. Sub-recipient monitoring is not required for entities deemed to be beneficiaries. So this was a big question during, CARES, awarding funds to maybe a related party, maybe, a tribal business needed funding to navigate its way through the public health crisis. And they made sure to clarify that those are beneficiaries and not sub-recipient, although that's a great thing to document during the award process in those situations. All the special reporting requirements are detailed within the compliance supplement, and the period of performance was again defined within the compliance supplement as beginning March 3rd, 2021. The end of the period of performance is 2026. However, all obligations must be incurred by December 31st, 2024. Our last polling question here for my section, true or false, revenue calculations are to be calculated and reported on the scheduled expenditures of federal awards. All right, see the answers coming in here.
Whoops, I think I put the wrong poll up there, so apologies.
Okay. We'll end this poll. Looks like we pulled up poll 4. No problem. We don't need to.
Sorry about that, folks.
No,
wait.
okay.
Well, I can relaunch that poll. If you don't mind, I'm gonna
Sure.
go do this properly. Here we go. Poll number 3.
Thank you. All right, one more time. Thanks, everyone. Sorry about that. All right, a couple more seconds here. We got a high number of answers that have come in, so I'm going to go ahead and end the poll here and share the results. And great job. The vast majority, 85%, said false. That's correct. Yeah, the actual revenue loss calculation is not what is reported on the CFA. That in and of itself is not an eligible use to be reported on the CFA. And again, Wes is going to go into some more detail about revenue loss calculation and how that works and when it is to be reported very soon here. So I'm going to go ahead and stop sharing and pass it over to Mr. Wes Benally.
All right, thank you, Mike. Appreciate that. Okay, so in my presentation, I'm going to cover 2 items here. Just a quick overview of a comparison between the CARES Act and ARPA. Just some nuanced differences there. Provide some examples of what we've seen so far, and in our consulting work we've done to help tribes across the country. In addition to that, we're going to go through kind of the process on how to calculate revenue loss replacement, the theory behind it, and then ultimately kind of a template diagram you can use in your mind's eye to think about when selecting what numbers to use. And then lastly, what the eligible uses are once you've calculated that loss. Now, obviously, as you are going through in your tribal operation, you're going through and picking what buckets to use to fund certain projects and all that. And then this revenue loss replacement is just one more tool to use when trying to identify what bucket to use to fund, any of your projects. So we're going to go through that right now. So with respect to CARES Act and ARPA, obviously CARES Act, really was something put together to support expenses already incurred. It was more of a reactive type of legislation. As you see there, number one, obviously necessary expenditures incurred. So, at the start of the pandemic, a lot of the tribes' general funds or, were used to, cover some of those expenses. And, also it had a metric of utilizing, not most recently budgeted for expenditures. And then, from now we have that the period begins on March 1st, 2020, it ends, this month. Also, just keep in mind, there is some legislation floating out there to possibly extend that to 2022. However, that is not official or in any legislation just yet, but, just keep an eye on that. With respect to ARPA, you can see there in the language itself, it's more forward-looking, if you will. It really allows, people to think, okay, what projects do we have to look toward the future to mitigate COVID? What processes or, projects can we put in place to, identify and fix what, if you will, the pandemic is, brought upon or exacerbated any current conditions that are out there in Indian country. So like number one, negative economic impacts, it's pretty broad. As Mike mentioned, this is a lot of flexibility in your documentation of this. Also, there's at least more structure now to what they call premium pay. And in the CARES Act was more of hazard pay, just a different name, but in the ARPA, it's more structured and has more defined terms of what that means. Reduction of revenue, which we'll talk about in more depth on how to go about the calculation and thinking about that. That's a part of it. And the last, obviously, is the infrastructure pieces, for water, sewer, and broadband. Now, that's not to get confused with the infrastructure bill that's currently out there for, various other types of infrastructure. Keep in mind, ARPA is specific to water, sewer, and broadband. Just some things to think about, with CARES Act, indirect cost was not eligible. With ARPA, indirect cost is. In addition to that, you might want to consider this when doing your indirect cost proposals. There was some guidance issued from the Department of Interior, from the National Business Center, that indicates that CARES Act funding will now not be included in the indirect cost base. So some people out there were worried about the CARES Act being included in the indirect cost base, therefore, maybe not allowing a tribe to recover indirect costs. So just keep that in mind. There was, some news out there that the CARES Act funding will not be a part of the indirect cost base. Now, as you can see there, the difference between the hazard pay and premium pay, The premium pay will go through in a little more detail in the next couple slides, but, as I mentioned, it's a little more structured, more guidance specifically on amounts and dollar values on which to use to calculate premium pay. Revenue loss, that is one thing there that is different from CARES Act. Previously CARES Act did not have revenue loss. It was not really eligible in there. Revenue loss now is. Financial assistance. This one here is really driven by what they call reasonably proportional to a negative impact. So previously it was necessary due to COVID-19. Now within the language, it says it must be reasonably proportional. So as you can see there is some professional judgment on your end to determine how you figure that out. Once again, make sure you have your fact patterns in place. Make sure that you have your documentation in place on how you calculated that, or what you think is necessary for that. Within the FAQs issued by the Treasury, they reference the qualified census tracts. So those are just basically the information set up for populations of areas, to help you determine that negative impact. And then lastly, interest income. Interest income wasn't allowed, it must only been used for eligible expenditures within the CARES Act. Now, interest income can be retained by the tribe. Just a quick shameless plug here, be sure to check out our webinar from our investment team. They provided a breakdown of possible eligible uses, what you could do with the interest income sitting in your banks now. Please visit our website, www.redw.com, to go and scroll through and take a look at that webinar. Now, as Mike mentioned, the compliance supplement is out. One thing to distinguish with this is that, CARES Act has its own assistance listing number. You'll identify with your new ARPA federal dollar money. You'll have the new ARPA dollar number of 21.027. Mike went through on, some of the requirements. So those of you that are grant accountants or are, in depth with some of these programs, or you're a program manager, this is a slide you want to definitely X or pay attention to, because these are all the areas that will be applicable for the specific funding source. So CARES Act, you'll see there is a little different from ARPA. Just once again, ARPA is a little more forward-looking, so it probably has a little more requirements to it than CARES Act, with respect to the uniform guidance. Now with differences between hazard pay and premium pay. As I mentioned before, the hazard pay was a little less structured, provided a lot more judgment on what that meant. I know a lot of, tribal organizations were trying to figure out, well, what does it mean? What could we use it for? How much of a person's time has to be dedicated to that? Who is eligible for that? Is an administrative type person eligible for it, or is it really just for direct frontline workers? Those were a lot of questions that were being asked during the CARES Act process. For hazard pay, it was really just definition here, just for performing hazardous duty or work involving physical hardship. Going to what specific level, is that, a police officer, directing traffic for a vaccination line, that obviously is something that is of use. But then you get the other kind of gray areas where you have an accountant who maybe is partly doing general fund duties, and then the other side, they had to help them pull to help manage some of the CARES Act dollars. How did you go through? Is that hazard pay? So some of those type of questions were being asked, and then so with the ARPA, it's a little more, if you will, structured in that sense. Here it says premium pay is now eligible for workers performing essential work during COVID-19 to make continuing operations essential to critical infrastructure. So critical infrastructure is something that the Department of Treasury specifically listed out as some examples. Please keep in mind that is just for general governments. If a tribe has its own definition of critical infrastructure, you're allowed to put that in your policy and have that what you deem is critical infrastructure. And we'll go through a list of that in the next slide here. The next is requirements with regards to pay. What exactly is premium pay? Previously it was usually just time and a half, something like that, to that effect with hazard pay. Also putting together your temporary hazard pay policy, something like and putting that together. In this case, you have specific guidelines to include in your hazard pay policy. The first is telework is not eligible. You're limited to $13 per hour and cannot exceed $25,000. So, and also it's geared toward your lower income pay individuals, for justifications that they can't be over 150,000 state average. I'll go through here for the examples here that they have is premium pay specifically. So critical infrastructure, what they list in the Department of Treasury's FAQs is in regards to healthcare, education, and childcare, transportation, sanitation, grocery and food production, public health. Just once again, this is just general guidance from the Treasury. So if the tribe deems to have other areas as critical infrastructure, you can put that in your policy. When you put your policy together for premium pay, you want to make sure you list those other areas that you deem are critical infrastructure. Retrospective pay, you can have retrospective pay. There is that specific date must have been incurred by the recipient prior to March 3rd, 2021. So those are some things that you want to add. They want to prioritize lower income workers, that pay can be up to 150% the greater of the state or the county average. That once again is just some guidance. If you feel like you have more discrete and detail of your area for the tribe, you can use that. And then the third party employers and contractors, there's also specific guidance on that. They are eligible. And you want to think about if they receive grants, it's at the discretion of the recipient. So you could provide those grants. Now, some things to think about when putting together your premium or hazard pay policy. Once again, remember that first off, you have to have a policy. I think that's probably a lesson learned from the CARES Act, with respect to premium pay. That policy has to be, organization-wide, but you can list, let's just say, for example, the risk levels of each department, for let's say. So, you could have, I don't know, for example, risk level 0. Let's just say there's no risk at all. So this department does nothing but remote work. So that's something you might want to think about. Since you have the range of $0 to $13 per hour, you could maybe list them as 0, since they won't have that opportunity to, I guess, be put in the way of hazard. Then you could have like a risk level 1, where you have, maybe mission critical personnel who work in the office, but they support more of the frontline workers, like more of your administrative staff. They're not directly working with COVID-19 cases. And so that one you may want to consider, a little higher dollar range for that, as far as what premium pay may be for them. Then you want to go maybe like risk level 2. Maybe they work more regularly, maybe some contact with COVID-19 type risks. You know, you might want to have a certain dollar value for that. And then lastly, maybe a highest level of risk, maybe like, well, I don't know, let's call it number 3. You know, those are direct contact with your, you know, the COVID-19 patients and whatnot, and you might want to provide them with the highest pay. So those are just examples to think about. But the biggest thing to pull from this is that you have to have a policy in place, and that policy has to be organization-wide. But within that policy, you can describe who gets what pay and how much, dependent upon their job description. So I'm going to launch a poll here. Okay, so we're going to launch a poll here. Is ARPA required for all uniform? Is uniform guidance applied to ARPA? So we got most of it. So we'll go ahead in the poll. Your results. So about good 87%. So that 13% out there, be sure, understand that uniform guidance is applicable. So you got to make sure that, you know, you have an understanding of that. Once again, go back to that slide that I mentioned with the requirements on there. They'll list it out, you know, and then show you which items are applicable to your grant. So those are the things your auditors are going to be looking at. So now we're going to revenue loss. So this is, I guess, a little more of the, in a sense, the more complicated areas, only because there could be different definitions from what is within the Department of Treasury's FAQs versus how a tribe understands its revenue sources. But we're going to go through here, just kind of go through some general definitions, go through where, you know, some of the sources you can take a look at to use as a comparison, and then ultimately, how do you go about calculating this number, revenue loss? So within the interim final guidance, you know, tribal governments may use FRF to replace lost general revenues. So once again, general revenues. You could do it for FY20 to 23s. It says within there, it's for a broad range of general government services, programs, or projects outside explicable eligible uses. So once again, as Mike mentioned before, that with ARPA, there's a little more room for judgment. But once again, you have to document your fact patterns and document how you believe this, you know, revenue loss has impacted the specific industry or department that you're in. So with respect to general revenues, so typically from the Department of Treasury standpoint, those are tied to underlying economic economies, with, you know, generally from tax revenues, current charges. This is typically called charges for services on your financial statements, and then miscellaneous general revenues. And you'll see there, we'll kind of have a quick breakdown of what that could mean. Intergovernmental revenues, federal funding from intergovernmental revenues is excluded in your special revenue funds when calculating revenue loss. However, there are some exceptions to include state-funded revenues. And then here is probably one of the bigger ones, is that revenues from tribal business enterprises must be included in this number. However, when looking at your financial statements, here are some things to consider with respect to your tribal business enterprises. Number one, transfers. You must exclude transfers. So if you're, let's say, for example, your tribal casino does monthly, quarterly profit distributions to the government, you must exclude those transfers recorded. However, you can include the revenue from that enterprise. once again, other similar type of transactions, distributions, or contributions, those are excluded. Utility revenues are not allowable. So once again, utility revenues are not allowable except for sewage and water solid waste fees. So those are two areas that they've accepted for that you could include, sewage and solid waste fees. Once again, if we kind of go back to the general definition of this, the ARPA, that is to help with water and sewage. So those are the utilities. I know there is some questions out there with respect to utilities. Most utility revenue is not allowable within this calculation, except for sewage and solid waste fees. Once again, here's a list of exclusions directly out of the Treasury. Refunds or correcting transactions are not included. Proceeds for the issuance of debt or the sale of investments. Agency or private trust transactions. So, Mike mentioned that, you can't put ARPA funds into some sort of pension plan, so there are police plans out there that, maybe are underfunded. And you may think to yourself, oh, well, maybe we could use some of this ARPA funding to fund some of those police pension plans. You can't. You can't have it saved in a rainy day fund, if you will. And then utilities, once again, we went through that. Most general utility information is not allowable. And then federal transfers to tribal governments. So just federal dollars are not allowable within the calculation of revenue. So the Treasury has the FAQs updated as of November 15, 2021. And what they recommend within their FAQs as far as, guiding, tribes on what to think about as far as revenue sources and what would be allowable, their reference was to the U.S. Bureau of Census Government Finance Employee Classification Manual as of 2006. It's like a 200-page document that lists, all these different account code classifications, the type of taxes and all of that. If you have free time, go ahead and read through that. But here's a general breakdown of what it is. As you can see there in the red, right next to revenue on the top, it says, that revenue is not allowed and excludes. We talked about this, intergovernmental transfers. And then down there to your left, any funds from the federal government are not allowable. You have the utility revenue. Those utility revenues are not allowable, listed under there. Socials, insurance trust revenue. So those are just retirement system stuff. All that's listed there. That is not allowable in the calculation. Now we go down to what's allowable. So with respect to intergovernmental revenue, they say, from your state government, that's allowable. From local governments, that's allowable. Now we go down to three main areas here. We talk about current charges. So on your financial statements, this is generally listed as, charges for services as a financial statement line item. Then you have tax revenue. Some tribes have listed their tax revenue in there, and these are just some examples. Now, obviously, this is not always geared towards Indian country. So you may want to consider what type of specific taxes your tribe has and add that into this. Is it up to your discretion? And then miscellaneous general revenues that are allowed. As you can see, there's a list. Once again, though, the sale of investments is not allowable on that. And then way to your right, tribal enterprise revenue is allowable. So here's just a quick depiction of that 200-page document. But, once again, just compare that to your specific tribe, the operations of your tribe, and then, you can use this pictorial graph to kind of gauge what you guys are going to call general revenue. Now, out of the general revenues, there was some questions, that we seem to come across a lot, and that is, how do I know if a certain type of revenue should be accounted for the purpose of computing revenue loss? So once again, The interim final rule provides a general definition of general revenue, and then they use the Census Bureau's annual survey. So if you go to the FAQs, they'll have that diagram, and then they'll point you to where that 200-page document is. So if you have time, you can go through and review that. And then another question here, will revenue be calculated on an entity-wide basis or on a source-by-source basis? So once again, it's on an entity-wide basis. You need to calculate everything on an entity-wide basis. The loss, okay, so now we're going to go through the step-by-step process on how to calculate the loss. The first concept to understand is what they call counterfactual revenue. So it's basically a trend line calculation that the government's provided to compare your actual revenues to, and then from there you'll calculate the loss. So you have 4 points in time in which you can calculate it at, December 31st of 2020, 21, 22, and 23. The most full recent fiscal year is what they're going to call your base year. You'll use that to identify the year you'll compare to. Typically, that is usually 2019, excuse me. Then what you need to calculate is a growth rate. You'll take fiscal years 2017, 18, and 19 to calculate that. Now, the guidance has provided a metric, which is 4.1%. They say, okay, so when you calculate your growth rate, let's just say, for example, you average out your growth rate from 2017, 18, and 19, and it comes up to, let's say, 3.9%. You can use the 4.1% as your growth rate. But let's just say, for example, you calculate 4.5%, you can use the 4.5% opposed to the 4.1. So you just have to calculate the average growth rate for the fiscal years 2017, 18, and 19, and that will give you a gauge on what percentage rate to use. Now, from that, you plug it into this formula, 1 plus the average growth rate. It's just a formula. There is a worksheet you can use. I'll talk about that here soon, if you haven't already done it. And what that does, it calculates the counterfactual revenue, basically just, what the revenue would have been if you continued at that growth rate, and then what your actual revenues are. From there, you can calculate the loss. Then you would identify your actual revenue. Now, to identify your actual revenue, you'll need to get, what information you have in your system, identify what's classified as general revenues, your tax revenues, your charges for services, and your tribal enterprise revenue that you have in 2020. And then sum all that up, you'll have a number, and then you'll compare that to your counterfactual revenue. Now, when doing that, make sure that it's pretty comparable. When you're putting that number together, sometimes you may calculate something that's just way off. So you definitely want to reach out, or maybe just make sure that it's reasonable compared to your prior years. And then lastly, to actually calculate the loss, you'll take the counterfactual revenue minus your actual revenue. So that is definitely something you want to think about. That will help you calculate that number. Now, for me, I like to see things in pictures, and then the Department of Treasury's provided this diagram. So if you will, you'll see here going from 19 to 2023, that dotted line is the counterfactual revenue. So that is the revenue that in theory would have been there. This is based on 4.1%. But in theory, if you calculate something different or higher, you can use that number. Then the light blue is basically you take that point in time, let's just say December 20th, and you subtract that blue, which is the actual revenue, and that's the loss calculated right there. And as you can see, over time, your loss should be generally less and less because the government would have had time to recover, if you will, in theory. So that's just a quick graph of all of that. Just another note here that federal awards that are passed through the state those are also excluded. So you want to make sure to exclude those from those pass-throughs that are passed through the state, but its funding source is the federal government. The GFOA has a revenue replacement calculator on its website, and you can download that to help calculate your revenue loss. It's pretty intuitive. You know, you plug in your information and then it calculates, you know, your growth rate, and then it calculates, you know, what your revenue reduction is. So if you want to check your work that you have to see if it's comparable, you know, go to the GFOA, and, you know, they have a worksheet that you can use. Now, here's a quick example. Let's just say, for example, you're going off your 2019 or even 2020 audited financial statements. And here are some areas you want to pay attention to. So your charges for services there, column is going to tell you how much revenue you got coming from there, from your business type activities and enterprises. And then you'll have, you know, your component unit, typically housing authorities. Sometimes those are casinos. You also include there, you know, your taxes, investment income. Be sure to exclude from your investment income sales of investments. That is not included in there. And then your miscellaneous income that you have there. And once again, transfers are not included in this calculation. Just a quick question here. In calculating revenue loss, are recipients required to use audited financial statements? No, you're not required to use audited financial statements. However, you should always be able and prepared to defend your calculation with complete and accurate information that have come out of your system. Should recipients calculate revenue loss on a cash basis, accrual basis, or modified accrual basis? You could use one of the three, you know, but you've got to be consistent between years. You can't go from cash basis one year to accrual basis to next. They have to be a consistent basis for calculating that loss. Here's poll number 5. I'm going to go ahead and get this shared with you guys. So a tribal business revenue is included in revenue loss calculation. So this should be pretty easy. So I think mostly everybody responded in the poll there. So we go to 85%. Good job. Yeah, just once again, you can include those revenue losses, but you don't include transfers, distributions, or contributions. Those are not allowable numbers to use when calculating that revenue for the year. So once again, just pay attention to that. Now I'm going to turn it over to Rochelle, and she's going to take it here for ARPA reporting and accounting considerations.
Okay, thank you, Wes. Let me share my content. Good morning. Thank you for joining us. Today, I'm going to be discussing the federal reporting and other accounting considerations regarding the ARPA funds. So the ARPA comparison to the CRF reporting is nothing different, you know, than the two different there are two different programs like Wes discussed on the comparison between the ARPA funds and the CRF funds. Well, the same thing is applicable to the ARPA funding regarding reporting. And one thing to know on this too is that the reporting for the CRF funds, the ARPA Act does not stop those. The CRF funding reporting will continue till the end of December 31st, 2021. And the ARPA reporting is separate, and it's going to be for the projects, expenditures, and sub-award reporting. So with this, With this, the reporting requirements leverage the existing reporting regimen used for the CRF funds to foster the continuity and provide many recipients with the familiar reporting mechanism. The data elements for the project and expenditure report will largely mirror those used for CRF, with some minor exceptions noted in the guidance. Some of the changes will be like the timing of the reports under the CRF reporting. After the quarter end, the report was due 10 days. And for this ARPA funding, the quarterly reports are due 30 days from the quarter end for those programs. And we'll discuss this a little bit in detail for those programs that receive more than $30 million. For the programs that received less than $30 million, those are going to be due annually. Also, the difference between CRF and ARPA is going to be the program and performance reporting. The CRF program did not have this, and it was not included. However, the ARPA guidance included it to build awareness and accountability to monitor compliance with eligible uses. So with this performance report, there is also some criteria, and it's going to be for populations greater than 250,000 residents. So this is not going to be applicable for tribal governments. Here, we're going to discuss the expenditure and project report in detail. And remember, tribal governments, the finance office, the accounting office, whatever it may be, whoever is basically administering the ARPA funds should read through the reporting guidance, because there is some very detailed categories to report on, and we'll discuss when we discuss the expenditure category on it. So with this, first, it's going to be the projects. They can be new or existing projects or investments that are funded in whole or in part with the ARPA funds. With this, for each project, the tribe will be required to enter the project name, the identification number, and the identification number is going to be created by the tribe, the project expenditure category, description, and the status of completion. For expenditures, refer to Appendix 1 in the guidance reporting guide. The tribe will be asked to select the applicable expenditure category based on the scope of the project, and there are 66 categories within 7 levels related to what we've been discussing throughout this webinar, which relate to the public health, the negative economic impact, services to disproportionately impacted communities, premium pay, infrastructure, revenue replacement, and the administrative efforts that the tribe may select from. Therefore, the tribe should consider designing the general ledger accounts in the detail to match the project for tracking purposes. So if the tribe doesn't have a robust fund accounting system, maybe this is going to be one of the areas to look into and see if you can justify the reasoning behind a new accounting system that keeps track of these general ledger accounts in detail and by fund. Because best practices is when the tribal governments receive ARPA funding, they should record the revenue in a fund specifically to ARPA funding, and then all these GL accounts that the tribal governments may enter into, keep that GL account specific to that project, just to help with monitoring and reporting the expenditures that you may enter into. Because remember, the period of performance that was discussed earlier is from March 3rd, 2021 through December 31st, 2024, that these funds need to be obligated and spent by December 31st, 2026. So it's important to keep track, and the easiest way to do it is assigning those general ledger accounts in your accounting system. Also, with the administration, the administration of the ARPA funds, it is eligible to incur administrative costs under ARPA to monitor these this program and or projects under the program. For the project status, once the projects are entered into the system, the tribe will have to report the project status for each period. Remember, it's going to be for each period for the following 4 categories, and it's going to be not started, completed less than 50%, completed greater than 50%, and completed. For the project demographic distribution, the report projects are targeted to recognize the disproportionate impact of the pandemic-related recession on low-income and disadvantaged communities. Therefore, the tribes are encouraged to design projects that prioritize these economic and racial equity and promote equitable outcomes. So for this, when you're going through and you're trying to distinguish the low income or the economic impact to the low income community, it's important to, off the bat, to go in and come up with a justification form for why you think the community is the low economic. So then when the tribal governments enter into these other projects, they don't have to keep going back and defining what the economic low income impact is. You can just document it right away on the justification form and always reference to any new projects that you may have that fall under the guidance to that one justification form and move forward. Also, with this is going to be the sub-awards and sub-recipients. The tribe should also provide detailed obligation and expenditure information for any contracts and grants awarded, loans issued, transfers made to other governments, and direct payments made by the tribe that are greater than $50,000. The tribe does not need to submit separate monthly sub-award reports to fsrs.gov as required based on the 2 CFR 170. Treasury will report this information for the tribes. Also, the tribal governments are responsible for the sub-recipients' compliance with registering and maintaining the updated profile on sam.gov. So remember, if you're going to pass these funds through sub-recipients, you basically need to monitor them as if you were the grantor and you were making sure that they were spending the money on the applicable compliance requirements under the guidance. For the Civil Rights Act, this is not applicable and it does not apply to the tribes. However, the programmatic data other than infrastructure are for all projects listed under the expenditure categories. And remember to the expenditure categories, if you're not familiar with them, start reviewing the guidance and you can find them in Appendix 1. The information should be listed the information listed must be provided for each report. Please note that the collection of some of this data is to begin in January 2022 or not before April 2022 for some of the categories. And then again, for the revenue replacement and loss and use of funds, the data collections may have already began and it could have been in August of 2021. For all projects listed under the water and sewer and broadband expenditure categories, so this is the programmatic data for infrastructure projects. The more detailed project level information is required. So then with this one, it's going to include the project dates and other project information just because it is going to be detailed. So, when you're doing the justification forms, I would just lay out everything as far as the information. And then when you start updating those categories for the projects for those specific categories, you already have it in the justification form and you can just transfer it over to the report. For budgets and NEU documentations, they are not applicable for tribes. Also, as stated earlier, the performance reports are not applicable to tribes that are under the 250,000 resident population. But for state and local governments who do have this, those performance reports are applicable. So here's just some of the reporting requirements that we're going to go through. And, yes, it's going to be the interim report, the project expenditure and sub-award reporting that we just discussed, as well as the annual single audit report. So the interim report was due by August 31st. And what this was going to capture those expenditures from March 3rd through March 3rd, 2021 through July 31st, 2021. But if some tribes didn't receive the report, receive the funding, then the report is due 60 days after receiving the funding. And that period is from July 15th, 2021 through October 31st, 2021. This also includes expenditures by category at the summary level, including the revenue replacement if the tribe plans to use it or already have calculated it as using it. For the project expenditure and sub-award reporting, this is going to be due January 31st, 2022. And then it's going to be 30 days after each subsequent quarter remember, and this is the important piece, is that this is for tribes that receive more than $30 million in ARPA funding. For those tribal governments that receive less than $30 million, as stated before in a previous slide, the reporting is due annually, and the report is going to be due, the first report, it's going to be due April 30th, 2022. And this is going to capture the expenditures from March 3rd, 2021 through March 31st, 2022. And then subsequent each year, it's going to be due for the 2023 and 2024 through the end of when the tribal government expends all the federal money, which is what? Through December 31st, 2026. So then for these tribal governments, it's just going to be due annually, but what's going to be different is this is not going to be done like on a fiscal year end, so on and so forth. The period's going to be from April 1st through the March 31st for that year after the first initial annual report is submitted. For the annual single audit, this is going to be due, which are typically due when? The normal before the pandemic, when were your audit reports due? They're due 9 months after the end of the year. So if you're a December 31st year end, your audit report is due by September 30th. So with the pandemic going on, the federal government did grant a 6-month extension beyond that 9-month due date. And so for that December 31st year end, the original due date was going to be September 30th. Now those December 31st year end audit report is due by March 31st, 2022. But one of the things that I want to point out here is that these are only, the extension is only applicable for year ends that end through June 30th, 2021. So if you are a September 30th, 2021 to date, we are not aware of any 6-month extension. We're not saying that it may happen or may not happen, but always keep, looking through the guidance, keep looking at the OMB, which is Office of Management Budget, where the compliance supplement, where you can go in and grab it and see if there's anything there that extends it. Because to date, like I said, we are not aware. So, for these December 31st, 2021 year ends that are coming up, now at the end of the month, the audit is due September 30th, 2022. So going now over the internal controls, this is not anything different that the tribal governments are used to seeing when, the auditors go in and perform their annual single audits. The uniform guidance, which is going to be 2 CFR 200, has documented, the internal controls for administering these federal programs. And the guidance that was issued on November 15th and updated November 15th has this table in there that has the internal controls for best practices. And like I said, this is nothing different than what you're used to seeing. So I'm going to go with the first part is going to be, the best practice is going to be written policies and procedures. For the most, all these tribal governments have policies and procedures. They have a formal document that captures all, the internal controls for administering these programs. And if it's not, at least it might be in draft form, or it might be updated, throughout various different years for changes that were made under the uniform guidance a couple of years ago. So what this is, the example is going to be the documented procedure for determining workers eligible for premium pay. I know that Wes went through the premium pay versus hazard pay, and there is, the criteria under the guidance. So if the tribal government does not have a premium pay policy, it is best to go in and develop a policy for that premium pay so that you can follow the policy and it's stated and everybody knows what the premium pay is, and they can refer to it in the policy. Also, it's good to have, so when you are going in and justifying, you can reference to the premium pay policy and kind of letting the federal government, which is the Department of Treasury, know that you went through and you really looked at the guidance and you developed this policy and you have it there. So, the tribal government, the community knows what it is and that you can pay the premium pay to the employees based on the policy. Also, the written standards of conduct. This is nothing different. It's the formal statement of mission, the values, principles, and the professional standards of the tribal government. So here it's the documented code of conduct and ethics for subcontractors. So the majority of the tribal governments that we work with do have this code of conduct and the ethics portion of it, but sometimes they may not be updated for the subcontractors. And, a lot of times with, throughout the years, because this is through expending through December 31st, 2026, as long as the funds are obligated, that a big portion of the ARPA funding is for infrastructure, right? The infrastructure for the water infrastructure, the bandwidth. So what the tribes are going to be dealing with a lot are going to be subcontractors. So it's important that you develop that code of conduct with those subcontractors because a lot of times they're going to be doing this work. For the risk-based due diligence, this is going to be the prepayment validations conducted according to an assessed level of risk. So with this, there's going to be various different risks associated with the ARPA funding. It could be low risk, where you're going through the guidance, it blatantly states on the guidance that this is an allowable cost. So that's kind of more like the lower risk. But for those projects that are not specifically stated in the guidance and you've done your research and you're stating that, yes, it seems to be applicable to the program, those are more like the higher risk, right? So with that, what you want to do is make sure for those that you go in and you have the level review, like, the level review could be, yes, referencing the guidance that it is question 2.1, that it's an allowable cost. But then if it's something that you're not too sure, that you've gone in, you reviewed it, you maybe met with a consultant, a CPA, and your auditors or attorneys, and they sign off and they feel like, yes, it's an applicable project under the guidance. And you're going through and basically you documented it all for that specific reason. Also, one of the things here is because remember the sub-recipients, this is going to make sure that you are really, really going to review the type of projects that the subrecipient may enter into, because if the subrecipient that you pass through the money over does not really follow like reporting guidance on previous federal programs, or there's been issues with allowable costs, you want to make sure that when you're going to pass this money over to them, that you really reviewed it and you based it on previous performance history to the recipient. With risk-based compliance monitoring, this is going to just be the ongoing validations that are conducted with that assessed level of risk. If it's low, moderate, or high, remember again, for those high degree projects, you're going to want to monitor them more. And, they might even have a potential risk for being, a higher risk of fraud, just based on some given program characteristics. Also, the record maintenance and retention. So here, you're going to have the creation and storage of financial, non-financial records. And then with the subrecipients too, you're going to have the storage for all subrecipient payment history or information. So with this, remember that, again, it's nothing different than what you previously gone through with the single audits and basically overseeing those federal programs. But here, it's going to be the same. The tribal governments must maintain records and financial documents for 5 years after the funds have been expended or returned to the Department of Treasury. So, just going through some other considerations, Treasury has issued various different guidance, but not as much as the CRF funding. There is the guidance that was issued, and the ARPA interim final rule and the reporting guidance. They had the comments, any comments that they may that you may have had were due by July 16, 2021. So the date has already come and passed, and then they are going to take these comments and take them into consideration and potentially update the guidance based on what they received. Also, as Mike mentioned, the Office of Management Budget has issued the 2021 Compliance Supplement. And if you do not know where to obtain this, at times you can even do a Google search and look for 2021 Compliance Supplement, and it should populate, and you can get it there. But also we have some resources behind our presentation that you can always refer to go see where you can find it. It's also important to know what your reporting requirements are. Yes, at the beginning, it's a little tough because there's a lot of information that, the person who's trying to update the reporting information to the system, it's tough because there's all these reporting requirements. There's all these reporting items that are needed as far as what the project is. Is it less than $50,000? Is it more than $50,000? Is it infrastructure? Is it, revenue replacement? So, the first initial, the interim, and the one that's going to be coming up here now on January 31st, 2022, or potentially in April, it's going to be a little bit tough, but, as long as you start getting familiar with these reporting requirements, they should be a little bit easier, and then help with the record keeping. So if you're seeing that you had issues with a certain item, maybe, for the next quarter, go in and change maybe the general ledger account, like we stated earlier, just something to help you simplify it. And then since this is for a period of time through December 31st, 2026, you you'll start getting more and more familiar with them. Also, ensure that you have written support and justification documents for any items that the tribal government may enter into. Before spending this money, and it's important to research and make sure that that project is allowed under the guidance, and the reasoning why you believe it's allowed. If it's one of those low risk items, it's there specifically stated in the guidance. If not, what research did you do to make sure that you feel comfortable that the project is allowed under the ARPA program? And then you can go from there, and that could be like meeting with your auditors, meeting with the consultant and or your attorneys or engineer. You potentially can have that engineer as a third party go in and sign off on it if it's like for heating or cooling. Also, it's going to be important to implement or revise your policies and procedures to match specifically the projects that you're going to enter into. For instance, one of the known items that I've known just talking with my clients is going to be procurement. So at times procurement is, you have to go through the right levels. If it's over a certain dollar amount based on your policy, you have to go to bid for these projects. However, what we are noticing is that a lot of contractors are already working on projects out there, and there is a time frame for this money to be expended. So, and a need, because it's a need to help mitigate COVID. So what you need is to kind of go through and kind of see what you're encountering and seeing maybe if the emergency urgency needs to be updated. It should be following what the uniform guidance has, but there is that chain supply backup, and at times a contractor may not be able to get to you soon enough, the one that may be the lowest. So you might have to improvise and update your policies and procedures specifically for that. Also, with anything that you're going into, always have a planned program. A planned program saying, yes, we did do the research, here's the justification, but that planned program also supports the policy and procedures. And then lastly, know how the expenditure is tied to the pandemic. Yes, there is the guidance, and it is, about 20 some pages long, but know and see how specifically what you're trying to use the money for a specific project, how it ties into it and how it is allowed. So with that, we do have a couple of polling questions. And on this one, Carla did populate it. So what is an allowable cost for revenue replacement? So I'll give you guys a couple more seconds. Looks like we have maybe about a little less than half participating.
I think we can go ahead and end the poll and share the results.
Okay, yes. So the correct answer is yes, the modernization of cybersecurity is an allowable cost under the revenue replacements. Next question. Annual single audit reports are typically due how many months after the tribe's fiscal year end? Okay, I'm going to end it just to, because the time is almost up. So yes, the correct answer is 9 months. The next question, how long is the extension for the annual single audit report? Okay, I'm going to end and share the results. Yes, 6 months. And remember, through June 30th, 2021. Okay. And here is just the ARPA reporting guide. And yes, it's state and local fiscal recovery funds is another term for ARPA. Here, you'll see that it was updated November 15, 2021. It has the general guidance over the funds, the reporting requirements, and then also Appendix 1 and 2, which has the expenditure categories and the evidence base intervention, additional information. So when you go through, you'll always see, like, you know, the latest, they'll have it marked or what version it is. This is the last one that they issued to date. The other one was, I believe, sometime in July. So then, you know, just wrapping it up, this is going to be your final thoughts. Look at what the community needs. Remember that the funding, the ARPA funding is temporary, so it shouldn't be used to focus on non-recurring expenditures. Also, one important thing that Wes did mention earlier is going to be the investments. So interest earned on the investments may be kept by the tribal government and used without restrictions. So maybe consider an investment plan for the fund. Also, approved indirect cost rates may be charged, and expect and prepare for any change in the guidance. So always be out there looking to see if there's anything that is new. I always just go check, you know, the Department of Treasury to see what's the latest, and they have the date of the last prepared document to make sure that you are working with the latest and greatest. Here's a list of those resources that we discussed throughout the presentation that you can always go through and refer as needed. And then Wes, do you want to speak to this?
Oh, yes. Hey, thank you, Rochelle. As another effort to keep everybody informed and kind of, you know, keep Indian country together, you know, we do have a podcast called Insights in Indian Country. Just type in wherever you get your podcasts. We have 6 episodes so far. We're looking to establish season 2, and, you know, definitely looking to keep on top of topics, you know, from our webinars, questions asked that create good case studies and talking about those. So don't forget to download and subscribe, and that would help us, you know, move forward this effort. We appreciate it. Okay. So in the essence of time, I'm just going to answer a few questions here. I know everybody's have some pretty good questions. We did our best to answer those within the chat box. We did have some questions sent prior to the presentation. I'm going to go ahead and try to answer some of those. And then looks like we got a couple in regards to indirect costs. You know, first, when there's a question in regards to with respect to impacted industries, would a tourism business have to be fully operational and have to be part of a forced closure to receive aid? Okay, within the FAQs, it says not necessarily. So whenever the tribe is putting together, if you will, a plan for, you know, business relief and whatnot, it doesn't necessarily have to be for business that may or may not have been totally affected by COVID. What needs to be in that plan is that a population or qualified census tract, if you will, of that area was affected in some manner. So when considering this question, and if you take it back to your tribe, that is one thing to consider. Like, how is the tribe putting together a plan, and how do they back up that plan with a populated area that's been affected? Typically, reservations fall within that definition. So, you know, that's one thing to consider. Another question with regards to, you know, probably the most common we've seen in Indian country is cash assistance. Asked, does the application program need to be set up? that's the best form of documentation. Yes, we recommend that there be some sort of review process done to that. One thing to consider with cash assistance is that, once again, you have to be paying attention to that. It has to be proportional to the negative economic impact. So you don't want to provide cash assistance way over, let's just say, the qualified census tract that you've calculated for a populated area. They do consider maybe thinking about providing cash assistance in accordance with what the federal government's provided, the United States and previous assistance programs. But as a tribe, you'll have to calculate that that assistance in utilizing that qualified census tract. So that's some recommendation for that one. With respect to indirect costs, it seems like we have a couple questions regarding indirect costs and the rate to use for ARPA. You can use your currently negotiated indirect cost rate, but it has to be the current and negotiated one. So that is what you want to think about. And when calculating your base, the BIA, the Business Center have, sent out guidance that the CARES Act can be excluded from that base. See here. Maybe one more question that we can answer. Also, what we could do is maybe send some of these answers, back to listeners just due to time.
Right. What I'd like to do, Wes, we could prepare a really comprehensive supplemental Q&A that includes both the questions that were submitted earlier in advance of the webinar and the ones that have come in today, because there are quite a few. So we'll prepare one big document with all the Q&A and post it along with the recording and the other resource materials and a copy of the slides, which everyone's going to get in about 24 hours from now. If you guys are able to, supply all the answers in that time, but we can always be adding to it because it will be on a live web page. So it will be a dynamic page. We can keep adding information to it.
Okay. With that, just once again, we appreciate the opportunity to, be of service to, Indian country and do our best to stay on top of these issues and carry them out for y'all to share. And everyone out there, happy holidays. And Rochelle, any closing remarks?
Yes, happy holidays, and thank you for joining us. And like Wes said, if you have any questions, feel free, don't hesitate, contact us. We don't know the answer to your question immediately. We can do some research, provide some guidance on the related topic.
Yeah, thanks everybody. And when I close the webinar, please know that a quick evaluation form is going to pop up on your screen. If you could just take a little longer, just a few questions to give us your feedback, that's always really helpful to us. So thanks again, everybody.
Thank you.
All right, bye.